Stock markets are volatile as they await additional monetary easing by any central bank. No longer can markets move by a natural process. Today, markets move because of computer algorithms attached to the precise words of the banking elite. As CNBC once said, are we all just slaves to the central bankers? You came here for the truth, so let me unveil that for you. We're going to get into this today, showing you how the economy is sinking. At the same time, we have the rich profiting more now than ever before. Let's get into it as we look at CNBC saying we are just continuing the pattern of selling into rallies. This ISM, that's the manufacturing index, is a wake-up call that the U.S. economy is very bifurcated. Also, the stock market is jockeying ahead of payrolls tomorrow. These are small things to worry about, but it is important to get into these. And you're looking at the key economic report out Thursday. The September ISM manufacturing index fell to the lowest level since May 2013. I personally believe that this number is obviously pushed up. Manufacturing should be at decades low. But regardless, at least it's pointing to the fact that it is declining. Overall, manufacturing is declining. Jobs have been shipped overseas, something that I harp on often. Not going to get into that much in this video. Most of the manufacturing indices have had a rough summer period, and the ISM is no different. It shows how negative low energy prices have been for the manufacturing sector. You can pinpoint and you can pigeonhole anything you want to. Just understand the important part of this article or any article. It's that manufacturing's down. That's what I try to do here at the Money GPS. I know I'm interjecting this fact here, but just trying to basically say that look for the key important information within those particular articles or within the particular statistics that are important to you. Manufacturing is down. Does it necessarily all the little details in 51.1 or is it 50.2? No, it's declining. That's what we need to focus on. Let's move it right here on the debt ceiling. It's a joke. I don't even know why I need to cover this, but it should be interesting. U.S. Treasury Secretary Jack Lew, in a letter to congressional leaders, said the nation's debt ceiling would need to be raised by November 5th, earlier than was anticipated. So here we go, the same old story over and over again. We need to raise the debt ceiling, but it doesn't actually increase the amount of debt. That's Barack Obama saying that. Based on the new information, we now estimate that the Treasury is likely to exhaust its extraordinary measures on or about Thursday, November 5th. I believe I've covered this perhaps once, twice, or maybe 100 times before of the fact that the debt ceiling continues to get raised over and over again, and they just raise how much money they spend. The better idea for them is to just do what they've been doing, and that is to hold the amount of debt at a particular level. So let's say they're at $18 trillion debt. Just don't let the number continue on. If you have that odometer there, just hold it steady at 18 trillion and it won't go any further. That's how you need to do it. You need to just fake the numbers entirely because it's a complete joke anyway. If you're in 18 trillion and you're not including the off-balance sheet numbers, then what does it matter of 19 trillion or 20 trillion? You're never going to be able to pay it back. Never. There's no possible way that the U.S. can ever pay it back unless it pays back in worthless confetti. Let's look at what I wrote about in my book, and there's a diagram showing you what they do with debt. Debt is an instrument to the bankers, to the banking elite. They use it to their advantage. So when you think they'll get out of debt, I've actually had conversations with people in the finance industry, and they actually say, look, they're going to have to fix it eventually. And this was years ago. The problem still hasn't been fixed. But I've had these conversations before, and they truly in their heart believe that this will be fixed. How can it be fixed when debt, the problem that we're in right now, is the instrument, the tool of control that they use not only to profit from, but to basically bind us to it and keep us subdued in a continuing, evolving process of poverty. That's what's happening to us right now. Okay, then we look at the Twitter stock here, declining significantly over the past little while. You can see how this is one of the stocks that is I would also like to think about it as the dot-com bubble 2.0, where we see certain stocks that engage in a pump and dump. Other stocks simply just didn't have what it takes, a lot of hype behind them, and they really didn't go anywhere. You need to understand that while many of these companies are very valuable to business and what have you, they are really, their valuations are far too high, far too great, and it is a lot of speculation which keeps them up. Now, the rich seem to be getting richer while individuals are getting more poor. We have this. The price of a square foot of real estate in Manhattan hit a record in the third quarter, rising to $1,500 per square foot. Now, think about that for a second. I mean, that's unbelievable to even think about. Despite some claims that real estate, especially at the high end, is reaching a bubble proportions, there are a few signs of a slowdown, at least for now. I have covered the other side of that argument here, that there hasn't been as many of the mega $1,000,000 properties being sold, but there is contradictory information to that, and I'm going to bring that to you. I don't always show you one side of the equation here. What I would have to say is that the richest of the rich are moving to certain areas, whether that's, let's say, San Francisco or London or Manhattan. We have other areas that people are simply fleeing from. So we're having a great divide that is forming. This is one obvious example of that, something I cover very often, so I'll move on quickly here. Now, this is a luxury apartment here that you can get for yourself. This is London. This cupboard under a stairwell costs $750 a month. Oh, how luxurious this is. Do you want to live here for $750 per month? I cannot believe that this is the situation. People are actually paying for this. This is unbelievable. And we've seen this in California, a very similar thing where I believe it's Airbnb has a couple properties on there selling tents outside of somebody's house for even more expensive than this. And we have the shipping containers and all of this. What is happening here is that the real estate bubble in particular areas is expanding to rates never seen before. Why? Because interest rates are so low and because of the money printing. Money printing allows you to increase asset prices, but it does not control which assets go up in value. Unless, of course, you print them directly and buy. But if you send it out into the market, it devalues dollars and things become more expensive. You can't necessarily control what happens, and that is when we have a $750 closet for people to live in. This is unsanitary and this shouldn't be allowed. And then we look at this. Something very interesting I just wanted to throw in here. I believe this is a very, very interesting prospect for the future, where we see water being a very important commodity. Drip irrigated lemon orchards at the Cadiz Water Project in the Mojave Desert. This is out of the New York Times. I think this is very amazing, if not just for a test, but to see what we can do. We're talking about the middle of the desert. There's no water, but using drip irrigation, they're able to do this. Now, this is very important, particularly in California, where we have a drought going on and a very serious situation. Gazing out of a turboprop high above this company's main asset, 34,000 acres in the Mojave Desert with billions of gallons of fresh water locked deep below the sagebrush dotted land. And it goes on basically to talk about the company and what they do, and right now at a loss. But what they say at the bottom is this: investing in the water industry is one of the great opportunities for the coming decades. Water is the scarce resource that will define the 21st century, much like plentiful oil defined the last century. I believe that this could very well be the case. But what happens if we run out of oil? Well, obviously a very serious situation. Prices increase. And then what happens if we run out of fresh water? We have a much bigger problem on our hands, and I see this as being a very big. Think about that. The Wall Street Journal. From the country where hotels operated by robots and androids serve as clerks and department stores comes the latest unmanned project, the RoboCab. Basically, Japan wants to begin starting this taxi service in 2016, where they will not have any people present within them. Of course, they're testing with people on the inside just in case, but this right here is something that we haven't seen outside of fictional movies, we do see the Google cars and they are on limited runs and what have you. And I just wanted to share one point, not to get really into the article, but wanted to read this part. There are a lot of people who say it's impossible, but I think it's going to happen faster than people expect. And I do believe that is the case. In fact, it's already going on right now. They're testing them in certain areas around the world. And what concerns me is that they are not prime time yet, but they're putting them live on the streets. And this is what's going on with robotics, with automation, with all of these different RoboCabs and everything that I've been covering here. I think that it's going too far too fast, and this is going to be a very serious issue. They're not only replacing our jobs, but they're doing so in certain ways, very profitable and with the automation in the factories. But think about RoboCabs and how dangerous this could very well become. And we have the robo-advisors for certain financial companies. And you have everything be taken over by the robots, by artificial intelligence even. And this presents a very big problem for us as the individuals. Not just because they can actually be more efficient than us, but because of the dangers that they present. That's all I wanted to mention for this. I hope that you found this video informative. Of course, if you do, please give me a thumbs up. Anytime if you want to support me, please give me a thumbs up. Those who aren't subscribers on here, please join me. There are over 27,000 subscribers on this channel. If you want updates that are practically every single day, covering the news, covering the deep intel that other channels and other mainstream media will not get into, it's right here at the Money GPS. Lots of free info here. Please check it out. And last but not least, if you found this video informative, you're going to find my book, The Money GPS, even more informative. If you want to look through the book, you can actually go over to Amazon. They have a look inside feature, allows you to flip through the book and see if you like it. Take care.